Hello, this is Brian Shannon from Alpha Trends Blogspot. It's Monday, November 6, 2006, and the market's just closed up here. Great day for the bulls. On Friday, we had noted that this trend line was broken, and I had warned that just because a trend line is broken doesn't mean that it's, a reversal is nearby. A lot of people get short when the trend line breaks, only to find out that, hey, we're still in a good uptrend. The pattern of higher highs and higher lows has not been interrupted. And that's what we've been focusing on here. And last Friday, the market came down to the level we were looking for support, and that was at the 4160 level. It did get the support in that area. It didn't come out and attain the bigger price target of 4130 based on the break of the neckline from that head and shoulders pattern that we observed on the intraday time frame, and that's this pattern right here when we look at a 30-minute time frame here. We've seen the neckline broken in here, and that suggested a move down to 4130. But what I was focusing on was I said that this level, the 4160 level, was more important. Don't get hung up on patterns and price objectives because a lot of times they don't get met, that we have to listen to the message of the market. And the message of the market was that there was support at this level. The market has not made a lower low. Now, we do still have that potential for a head and shoulders scenario here on the daily time frame that we could be building a right shoulder. It's way too early to call for it. It's just a potential scenario, something that might happen. But clearly, there's still buyers in this market. The market broke past this level of resistance from Friday near that 42.15 or so, and it really never looked back throughout the day. And I think the reason for that is you had a fear-induced rally because of all the people who did end up getting short and were scrambling to cover their positions. They were, initially the market gapped higher. There wasn't that pullback that people were looking for, and that to cover those shorts, and that kept the pressure on the sellers all day long as they came in to cover those bearish bets. So the Qs are continuing to act strong in a good uptrend. The trend is slowing down a little bit in here. We can see this, 4160 to 4280 level in here the last couple weeks. But really no damage done yet. So the buyers continue to be in control. The group we've been worrying about, semiconductors, did find some support down near this 33 level. And what I've been focusing on more is about that 3265, 3270 level, saying that breaking below there could just push this whole market back down to about $31. Now, on the SMH, what we saw in here today was just another turnaround. Friday afternoon, we had a little bit of buying in there, but the market got back up above this 3330 level that we had been looking at last week as that support area from these prior levels, and now it's back up above there. So I think that 3330 level does take on added significance again. Now, maybe the market, the SMH in here, is going to just start turning sideways because we have all these moving average crisscrossing, which represents indecision. And now it's just time to, take it easy and go on the shorter term time frames. I've been stressing in here that we have to be defensive in this environment until the market gives us better a better idea of who's really going to come out with control of these semiconductors. Is it going to be the buyers or sellers? And right now, it's really up for grabs. Although, we've got that declining 200-day moving average. The market is below its 10, 20, and 50-day moving average, and it's giving us reason for concern continued. The mid caps, got hit hard, made a lower low last week. What I said was let's look for a rally up towards that 10-day moving average, and not that the 10-day moving average I was expecting to act as resistance, but that makes a good likely area for it to bounce to. Now let's see if the market can make a higher high. If it can make a higher high, well, then this is going to serve as a great shakeout for the market to continue higher from. But if it fails, then we've got bigger problems to worry about. And I don't have time to get into that today, but clearly it's something we've been talking about for a while. The S&P 500, same thing here. The market came down. We've got a market that's innocent till proven guilty. The sellers aren't going to be able to push this thing lower until this thing, the 50-day moving average, flattens out and then starts to turn lower. Just as the buyers couldn't gain control until over in here when it started turning sideways, and then it broke back above all those moving averages. That's where the buyers took control of the S&P 500, and they've still got it. The market now, this level is going to be important down near 136, because that's going to be the higher low that we have to mark going forward. But even breaking that, I think it's just going to be more of a sideways action, that we might expect for some time. Let's go ahead and take a look at these stocks. PCCC, this is PC Connection. We got involved in this one last week as it broke above 11.5. We had had our stop. Let's take a look at the 5-minute time frame. We had raised our stop a couple times, and last time we had it at 11.60. I think you can raise your stop up now to just under 12 bucks a share. Let's say 11.98 is where our stop will be in PCCC. ARRY, this is ARRY, typed it in wrong. ARRY Biopharmaceuticals. These guys have earnings after the close, I guess, today. So it's probably a good thing we got stopped out of this. But we were in last week at 10.01, right in here. And I'd suggest raising your stop to 9.82. We were stopped out of there with a loss of about 19 cents in ARRY. We had an open position in Cameco, CCJ, and Cameco, gapped down initially, and that gap brought the stock down close to our target. I guess our target was actually 32.5. I can't say that, but it came down to S1 today, and then rallied back up above. Now, what I had suggested in here, we had gotten short below 33.65 on Friday, so we got involved right about here, and I had suggested keeping your stop at 33.92. Well, the market really took off, and when they close their gap and go positive, I would suggest you lower your stop to break even. Officially, though, we got stopped out of this with a 27-cent loss today in Cameco. The little stock that we still had an open position in was Biomira. We had gotten involved last Friday at $1.29 right here, and I'd suggest raising your stop to $1.25. I think you can now raise your stop to $1.31. In Biomira is the new stop there. Now for this plays from last night, over the weekend that is, a couple longs, AFFX. First of all, we're looking for a pullback to 25.60, and then to purchase the stock on strength above 25.75. Both of those did occur, so the stock should have been purchased at 25.75. Our stop was at 25.37, and now I think you ought to raise it above this little low right here. We'll say our stop is now $25.68 in here, putting our theoretical risk at this point at just 7 cents. Atheros Communications, symbol ATHR. It gapped higher initially this morning, so you shouldn't have chased that. Instead, we were looking for it to pull back to 21.50. We got that pull back to 21.50. Then we were going to buy it on strength above 21.65, so it should have been purchased in here. The stop was going to go at 21.33, so that wasn't hit, obviously. I think now you can raise your stop, and I would say at this point to break even in ATHR, break-even stop. TELK, this one kind of was all over the place in here today, but what we're looking for was a pullback and then the buy on strength, which we got, and then we did get stopped out as well. So it got a little choppy in there in TELK. I still think the stock looks like it has the potential to continue higher, but officially we're stopped out of this thing. I don't have a position in it either. We're looking for a short sale in AMD if it broke below recent support, and that didn't occur, so there was no reason to get involved in AMD. Market told us stay away from the short side in there. And in Cubist, symbol CBST, we're looking for a short sell below 21.65. We got that move. The stock looked like it was going to break down, but buyers came in, and it should have been stopped out right in here with a 20-cent loss at $21.85. Finally, I'd mentioned Vion Pharmaceuticals, symbol VION, and this stock did get moving. I had noted the big volume on Friday. A lot of times volume precedes price action, and Vion I think continues to act good. Maybe it's going to just take another couple days before it can push through that 200-day moving average. But if it can get above that level, I think it can make a run for right up around $1.90 or so, the way these little stocks have been moving. But it is a small speculative stock. There is risk, so be careful with it.